Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, February the 23rd, and I'm just going to take a brief moment to discuss what equity markets did last week. The S&P 500 finished the week down 28 basis points, or down 0.28%. But the mid-cap index was actually up 1.02%, a strong week for the mid-caps, and an even stronger week for the small caps, up 1.5% on the dot. So a strong week for the small and mid caps, but as we've entered into this week, volatility has really crept in to the markets. And as we've talked over the last couple of weeks, we talked about how the beginning of the year rally was not necessarily going to be sustainable. Otherwise, we'd have that annualized return of around 119%, which would be great, but that's just not realistic. So as the volatility has crept in, what is really interesting is how severe and extreme the volatility has become, especially on individual company names, whether it's because they're reporting corporate earnings and they're slightly missing expectations, whether it's their guidance is not in line with analyst expectations, or there's some type of news that is going on within that in the industry or within that specific company. You're seeing dramatic moves of 10 to even 20% downside on the day. And so what's causing all of this volatility? Well, one of the reasons is we used to have market makers over the years that would step in volatile times and kind of offer a level of support and buy stocks at a lower price. Those have mostly gone by the wayside. So because most individual investors now own stocks in bundles, whether that's through ETFs or mutual funds. And so you don't have most people owning individual equities anymore like you used to either. So what happens is you have high frequency trading, and then you have the algorithms that kick in that can really drive a stock down severely off of one of those types of news headlines. Again, those are missing on earnings or your guidance is light. And what you're seeing this earnings season is you're seeing a good majority of companies beating analyst expectations, but you're seeing a lot of cautious guidance from CEOs because they don't quite know the macro environment that we're heading into. They can't predict when the Fed's going to stop raising rates and what that's going to do for the environment. And when they say those types of comments on their conference calls, you're oftentimes seeing those individual equities down 10 to 15% if they're smaller companies. So how do you navigate through this as an individual investor? While it's not fun to go through it, it creates opportunities, especially if you've been looking at a stock and you've said, that stock has just run away from me, I missed my buying opportunity. The prospects or what that business does is still great and sustainable and a great growth business for the next several years. I can see past 1 or 2 quarters of slowdown, and I'll take my opportunity to enter here now at this price because it's down so much. So look for those for buying opportunities. If you're looking to upgrade your portfolio, especially if you have some winners that you're thinking have topped out, go ahead and replace some of those with some that have more potential on the upside. The other thing to do, again, is if you're on the other side of that and you hold the equity as it drops down significantly, is you need to decide, do you still believe in that business's prospects over the next year, 2 years, or whatever it is that your individual time horizon is. And if you still believe in it, time will straighten out all of the volatility that you see right now. If you don't believe in the prospects anymore, look for an opportunity to exit that position and find something else that maybe has dropped recently but has more potential on the upside. So as always, if you have more questions about how to navigate this volatility in this equity market, feel free to reach out and give us a call. We'd love to talk to you. You can always check us out online at www.riverplacecapital.com. And again, that phone number is 904-346-3460. Thanks and have a wonderful rest of your week, everyone.